What is up, guys, and welcome to another edition of the Market Marauder Show. Be in the market one trade at a time. If you're new to the Market Marauder Show's investment channel, helps you to find the best deals in the market. So the market is currently going down. There are a lot of things that are going on that are helping to push the market down. So this previous week we had the FOMC recap, which basically is the Federal Open Market Committee had their recap, basically outlining some of the things that were going to happen during 2022. One being the interest rates. That's something that is definitely important to fuel the entire economy and something to look at. Next, you have the market itself crashing. So the Dow Jones itself was down 68 points or 0.2%. And then also the S&P 500 fell about 1.2%. So these are things that are helping to push the market down. And then next, you have some recessionary things that are starting to shape up. There are a lot of people who are saying we're going into a recession. I personally don't believe that we're going into a recession. I don't think it's gotten that bad yet, but there are a lot of things that could help push us to a recession. So you have the shipping crisis, you have housing prices that are at all-time highs, you have tons of other things that are helping to push this market down further and further. You also have massive stock sell-offs, which are not helping the situation in general. So in this video, going to be going over some of those things. Going to be reading some of the articles to help you make a better, more informed decision on where and what you should be doing with your money. So the market, like I said again, is starting to show a lot of red. And in this video, I'm going to be analyzing some of those plays going on in the market. All right, so first let's go over the FOMC, which stands for the Federal Open Market Committee. It is a branch of the Federal Reserve System, or FRS, that determines the direction of monetary policy, specifically by directing open market operations, or OMOs. The committee is made up of 12 members, the 7 members of the Board of Governors, the President of the Federal Reserve Bank of New York, and 4 of the remaining 11 Reserve Bank presidents on a rotating basis. And so this is the group that helps with financial policy for the whole banking system as well as for the U.S. in general. So it really definitely has a huge effect on the market. Now this conference was led by Jerome Powell, and so Jerome Powell gave his message, basically explaining all the things that are going on. One of the main things again is the inflation and interest rates. And so interest rates, they plan on raising them coming around March, but definitely is something to look out for. So if you're new to investing, if you're new to jumping into the stock market, you may be saying, the market is down, it's very bearish. Is this the right time to jump in? Is it not the right time to jump in? That all depends on what your goals are for the market. So if you're a day trader, it may be a little more difficult to make profits on a lot of these plays because the market is going down. If you are a long-term investor, which investors and day traders are completely different categories. Investor is someone who invests for the long term, so dips in the market are great things or great buying opportunities for them. Day traders are people who are trying to make, fast money really quickly. And so dips in the market are not essentially a good thing. Not to say you can't make money during a period like this. And so, depending on what your trading style is, the FOMC and any updates from them definitely help push the market forward, especially the stock market. So one of the things that come out on here is Fed's Bostic tells the FT the central bank could hike rates by half a point if needed. So this is a pretty prominent or important figure. And so Raphael Bostic, who is the Fed president, the Atlanta Fed president, said that the reserve isn't running out raising interest rates by half a percent instead of a typical quarter point move if inflation remains high. And so it's largely believed that those hikes will be in a quarter point increment through some uh, uh, quarterly increment through, though some in the market believe that half a point hike is needed to tame inflation. And so the ultimate goal is to try to get the inflation down. In general, as you see, a lot of people are buying items. The job market is starting to bounce back, but there are a lot of items that have gone up significantly in price. So when you have items go up in price and you don't have the wages match that, then essentially you have inflation. So people aren't making extremely more money, but the items are going up a lot more. There's still a lot of jobs that are out there and available, but people want wages that will subsidize, all the stuff that's going on. So this kind of all stems from the stimulus that came out a year ago. There was a lot of money that was given out into the market, so people had tons of money to buy, household items. But once that money starts to run out, which is time like now, there starts to be, ways to try to have that lifestyle that you had back then, which maybe led to the Great Resignation, where people quit their jobs. People went and got different jobs, tried to upgrade, get new skills, go back to school, things like that. So when you think of the Great Resignation, I feel like there's a negative connotation behind it. I don't think it was just a bunch of people quitting their jobs. I think it was people getting better jobs, trying to improve their life situation. People who have maybe had a taste of remote work want to have a job where they can fully work remote because they like that lifestyle. People who essentially experience time freedom. When you get a job, usually it's like you go to work, you clock in, but because of the recession, a lot of these jobs were forced to do remote work as a temporary measure. Some people enjoyed their remote work, some people didn't enjoy their remote work, but I think the Great Resignation was onset of now people had the opportunity to work remote, and now they want jobs that they can do remote working. Also, it was people who were like frontline workers, um, are really out there putting their health and safety at risk with not really much additional pay for them. And so I think that was also something people doing different career decisions based on that. So next bullet point was, are we in a recession? So I don't think we're in a recession. I'm going to give you the definition of a recession. So recession is a macroeconomics term that refers to a significant decline in general economic activity in a designated region. It has been typically recognized as two consecutive quarters of economic decline, as reflected by GDP, in conjunction with monthly indicators such as a rise in unemployment. However, the National Bureau of Economic Research, or NBER, which officially declares recessions, says the two consecutive quarters of decline in real GDP are not how it defined anymore. The NBER defines a recession as a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. So I would say we're not in a recession just for the fact that all of those categories have not been hit. There have been sections where, yes, employment was down, industrial production was down, but there were not sections where retail was down and the entire GDP was down. So, real income rose to kind of offset some of these different measures. People got raises. There are a lot of people promoted, got different jobs, new jobs open, and then the GDP start to go back up. You had wholesale retail sales that start to go up because of the stimulus money that was being pumped into the economy. And so wholesale retail sales were up. People were buying a lot of gifts, especially before the Christmas time, before Black Friday. People were buying a lot more items. You saw retail start to climb a lot. And so that definitely helped boost the economy overall. Now the stimulus money is out. Employment is the thing that's starting to shine. More people start to get jobs. You're starting to see more production of a lot of different areas. You'll even start to see, the president talk about going and trying to get some of this industrial production back into the U.S. You see companies like Intel say that they're going to build, a factory to help the chips shortage because there's a chip shortage going on. And so Intel is trying to build a factory in Ohio to help offset that. So you're starting to see different categories go up while other categories go down. In my opinion, I think a recession is when all of these categories start to go down, and then you'll start to see the real GDP go down itself. And so, no, I would not say we're in a recession currently, but if employment starts to go chaotic or industrial production starts to go chaotic, and then wholesale retail sales start to go back down, then I would say we're headed towards one. And so another question may be, well, are we in hyperinflation? And so hyperinflation is a very interesting term that's used, by some different people. Jack Dorsey, who's the CEO of Square, basically said that he was worried about the economy heading towards hyperinflation. Now he's real big into the cryptocurrency area now, kind of transferring or phasing out of Twitter, which was kind of his sole goal back in the day. But he said he's worried about hyperinflation. So hyperinflation is a term to describe rapid, excessive, and uncontrolled general price increases in the economy, while inflation is a measure of the pace of rising prices of goods and services. Hyperinflation is rapidly rising inflation, typically measured more than 50% a month. And so I don't think we've seen a 50% a month increase in goods and services. I know we've seen an increase, but I don't think it's been a 50% increase. So I don't think hyperinflation is what we currently have. Now, if the shipping crisis is not really mitigated, by the end of 2022, and we still have, these low interest rates, and interest rates are not really fixed, and then we also have a lot of the other measures, you could then see hyperinflation. So, I really wanted to outline the definitions of these items, all of them, which I think are helping to make the market go down. There are a lot of different things that need to be fixed in the total market overall, but drop a comment down below. Tell me, do you think is it a great time to buy, or do you think it's a great time to sell? Are people taking profits, or are people starting to buy more stocks? What I've personally seen is towards the end of 2021, you start to see a lot of CEOs sell off large portions of their shares. And I think that's one thing people aren't really talking about. You saw Elon Musk sell a lot of his shares, which was definitely an indicator, because he never sells his shares, at least in that quantity. You start to see a lot of other CEOs, like the AMC CEO, sell a lot of shares. There are a lot of CEOs who were selling their shares, which to me started to signal that the market was about to take a decline. When the really wealthy people start to take profits, then I say, okay, what is really going on? What do they know that we don't know? And so that was kind of the first highlight. Then you start to see the market start to go down with a lot of government policies and the government meetings that start to go on. And so are we headed towards hyperinflation? Are we headed towards recession? I don't think so. I haven't really seen the indicators, but I do think that what all investors say is to buy the dip. In my personal opinion, I will be buying the dip. So I'll be looking at some of the plays that are out there that are on sale, like Apple. Apple is a $3 trillion market cap. I don't think Apple's going to go bankrupt anytime soon. So whenever Apple is on sale, I personally try to load up. Microsoft, Facebook, all the ones that are like the top 10 of the S&P 500, if they're on sale, I think it's a great time to purchase those. Now, bear in mind, it's not financial advice. I'm not telling you to invest or not to invest into any of these plays, just helping you to see what's going on with the total market so that you can make a better decision with your portfolio. So, good luck to everybody out there trading, and I'll see you guys on the next one. Peace.